historically, we've seen a lot of startups in the last 5 to 10 years come up. And one of the strategies that startups go forward with is IPO. And being in India, we wanted to highlight the journey of a founder taking the company all the way from scratch to IPO. And for the same, we have Abhishek of Tracxn and Avinash of Zaggle. Thank you so much for coming on board. So this session, we have curated a lot of questions that we crowdsourced from the community, which highlights a lot of experience that both of them have gone through. So I think we'll get started. So Abhishek, Avinash, both of you come from very different backgrounds. You started with tech, you were briefly in investments, and then you became a founder, and you were in banking before you got into starting up a company. So how was your experience, or was your expectation of the way you wanted to run a company, how did it align with your IPO journey?
Good question. I think the first thing that you realize when you get into a startup at a very early stage, right? You realize that whatever you read or thought or imagined, reality is very different, right? And at that stage, IPO is like, so far away in your mind that you don't even worry about it or you don't even think about it. It's like, and anybody who's played sport can relate to this, right? A kid playing cricket in, palace grounds, tomorrow going and playing for India, right? You don't expect that to happen. You just say, let me survive this, this level and try and get to that next level. And once you're able to start seeing some of that movement happen, probably we started to think of an IPO seriously and planning for it about 3 years before we actually went IPO, which was last September.
In my case, I think IPO was always on the cards. I knew about a company going public when I was maybe before 10 years old. I grew up in a Marwari family, so business was always part of dinner table conversation. And I had some vague idea. I didn't know exactly what it was, but when we started, one of our initial angels told me that today you should decide if you're building for IPO or if you're building it for selling the company. I asked him, what does it mean? So he said, look, if you're building for M&A, I think you should build a great product and then try to sell it before you scale too much, because you will not get incremental value for the revenue you make. But if you're taking it public, you build fundamentally strong company, and you have to look towards scaling revenue. So at that time, we were actually initially thinking of registering the company in US. We actually closed it down, make India our headquarter. And from very early on, like within maybe 6 months of starting, we always knew that as soon as we become profitable, we'll start to working towards the listing process. And I think in December 20, we became cash flow break-even, and that time market was going up. So we started working on that. It took us almost 20 months to come out, but for us at least, it was it was part of our strategy from a very beginning.
Awesome. So since you already knew that you were building for IPO, what were some preparatory challenges that you faced or anticipated? Or what were some unexpected challenges that you faced?
So I think we had a broad, vague idea that you have to be a winner in your micro market to be qualified to eventually become a listed company. That actually turned out to be true. You have to be able to communicate your idea very easily. So in our case, you would say that, look, all public market guys use Bloomberg. Startup investors use Tracxn. So it nailed the idea in the head very easily, and people find it very easy to understand. So that really mattered. What was surprising for me was the amount of customer ref check that investors did. I was not expecting that they'll find so many customers, and these are not provided by us. They found people from their own network. And eventually, a lot of customers told me, though I spoke to 3 or 4 potential investors, and even today, anybody, even a retail investor who's buying, let's say, 10,000 shares, they will find somebody in their network to speak to who is a customer and then find it. So I think customer love was really, really critical. So you may not have too many customers, but them speaking very positively really mattered. I didn't expect regulatory hurdles to be a big journey. It was not very big, but it's a new system to navigate. So we had a couple of people who really helped us. One who came from public markets background, one came from finance background. And I usually tell people that, look, if you're going to go to Japan for the first time, talk to somebody who's gone to Japan before. Right? You don't have to solve everything using first principles, and that was the same experience we had. So we had some hiccups during the process, and those people were really able to help us.
Avinash, in your case, so when you started up, you did not really plan for an IPO. But when you decided you were planning for an IPO, how did you time your market sentiments and launch?
See, I think important thing is your business really solid? Do you believe that your business has reached a stability in terms of business model maturity, in terms of profitability? So we've been profitable for the last 5 years at a PAT level. Right?
Amazing.
So those are things which once you start to hit, you know you're doing something right. And my suggestion to anybody who's looking to go IPO is to build towards a profitable business. And not at some contrived matrices, but at a PAT level, actual PAT level. Because public markets don't really care for CM1, CM2, and all those matrices which the startup world looks for, right? They're talking of revenues, gross profit, and gross margins, EBITDA, and then PAT. That's the world that you live in. So starting to think on those lines, starting to work on those lines. Fortunately, we were thinking about our business that way much before the time we decided to go IPO, right? And once you see that there is a certain response that a particular set of investors are giving to you, you gravitate towards that. And I echo what Abhishek said. We had, a very large private equity term sheet, right, from a top 3 private equity fund globally, and that was, hundreds of millions of dollars, and the valuation was something close to what we have today. Today we are valued at about 4,800 crores, and 2 years ago that was the valuation that we were getting. But precisely what Abhishek mentioned, is it that you're building to sell, or are you building for perpetuity? In your mind, are you building for perpetuity? And, in our case, both Raj and I, we were building for perpetuity. We were not building to sell the business at any given stage. So I think that made it very obvious for us that the IPO is the right path forward.
Got it. So looking at the market for a bit, I have some numbers here with me. So this is as of 2023. Companies listed in NYSE is around 2,200, NASDAQ is 3,400, whereas BSE it's 5,300. It's like a huge jump. NSE, although slightly lower, catching up 2,200. And we see these numbers going up every single day. So what could be, in both of your opinion, what could be the driving factor behind this increase in number of companies?
See, I think the Indian public market is probably the most buoyant public market in the world today, at least in the large markets. A lot of the money that 5, 7, 10 years ago was going into different assets, had different color, is all moving into the public markets, right? And that is creating a very broad-based market. One of the big things that's happened in the public markets, for example, IPOs used to be largely driven by foreign money 3 years ago, right? Post that journey, today, if you want to do an IPO of a company in India, what matters is the domestic MFs. Are the domestic MFs, there are 5 or 6 MFs which are really big, and you need a couple of them to come on board, right? And the FIIs follow. So it's a paradigm shift. Before this, all these years in India, the FIIs would lead, the domestic MFs would follow. So it's changed just in the last 2-3 years. So the markets in India, the public markets in India are super buoyant. And I'm not surprised by these numbers. I think for all the ahs and oohs that we hear about the regulatory restrictions, I think the Indian regulations for listing are also fairly easy. If you talk to somebody who's listed in NASDAQ or especially the European markets, you're actually seeing a reverse trend. A lot of companies are going from a listed entity to going back to being private. because the compliances, the ESG requirements is simply too onerous for many businesses to be a public company. So I think we in India have struck the right balance, and I think that's the reason why you're seeing so much buoyancy in the market.
So I would completely resonate with India has a good balance of regulatory overhead of running a public company. So if you look at NASDAQ, like it can cost around $15 million of overhead just to run a public company. In India, that number can be as low as 2 crore a year. And that too when you have like a tier 1 vendors, if you can actually run it cheaper even if you don't have tier 1 vendors. So there is a good balance between regulatory oversight and cost. So it becomes easier to run a public company. Second, I think if you break down the numbers, we have 5,000 listed companies, but in last 5 years, we only had 200 companies that went public. So at that run rate, it will take maybe 100 years to produce next 5,000 companies. So it's not, it feels like a lot of velocity, but it's still like this velocity has been there for last many years. And for startup ecosystem, it's a new discovery, but it was an open secret out there. Many people knew it. It's just that our tech ecosystem, startup ecosystem discovered it now. But there are like 5,000 companies listed and just 200 in last 5 years.
Got it. And speaking about markets, has there been a change in the type of investable narratives, maybe from 10 years back to now?
Yeah, so I think in the private markets, for sure, you're seeing people talk a lot more about profitability, right? Public markets have always been focused around that. What's changed in public markets that we believe is companies like Tracxn, companies like Zaggle are now finding a foothold. There's a lot of premium that's being accorded to companies which are unique and market leaders, right? It's no more that you need to be a steel mill or a traditional business. You can be a SaaS company, you can be a tech company. It could be B2B, it could be, you have B2C companies like Zomato who's doing very well, right? And those are examples which the public market, even at a retail level, is lapping up. Of course, institutionals understand it much better. So I think that's again a very big shift. You're seeing two trends. One, the private markets are becoming more mature and they are seeking profitability and they are becoming more guarded for sure. And the public markets are opening up. They are becoming a lot more open to newer ideas, newer themes, especially when you have a moat, when you have market leadership. And if you do have profitability, then you are the blue-eyed boys or girls.
So I think Avinash has covered most of the points. I was personally pleasantly surprised by two things. One is everybody in the market when we went said that, oh, you guys are such young founders to come and list. In Bangalore ecosystem, we are practically the oldest. So I think it was a pleasant surprise to see that a 40-year-old founder listing is considered too young.
Oh, who was the youngest?
There may be a lot of young founders, okay. But they expect usually people between 50 to 55 to come and list, and they talk about succession planning. So in our case, they were saying, oh, there's no succession planning required, which was a very pleasant surprise. Secondly, I was expecting a lot of people to struggle understanding what we do. But it was a very pleasant surprise. In 5 minutes, they would come and say, oh, your business is so easy. You create a login and send it across. What's the challenge in your business? And I felt that the acceptability of new generation ideas, unique ideas was very good. I was expecting it to be a huge challenge, and we prepared a lot of material to explain people what we do, but that was a very pleasant surprise.
Got it. Are there any steps that you take to influence the risk sentiment of the market as a company or as an individual?
So I think public markets expect a lot of mature behavior, mature business model, and a lot of maturity in market share. So all of these things has to be in place. From compliance perspective, they expect company to be really high. So in our case, for example, we had Mr. Tata and Mr. Nandan Nilekani as personal angels in the company. So because of their presence, we were always anxious that we shouldn't do anything which eventually gets negative PR and they become anxious and they sell. So we always had good high quality vendors, Big Four to audit, and all kind of vendors which were probably tier one. So that really helps us a lot. Usually finance team is going to be quite active, but they can still miss out things. So we had lot of good vendors. On business side, you have to do like what is best for the overall market. But on the compliance side, I think get good finance team plus get good set of vendors.
Yeah, I echo that. So one of our independent directors, for example, is Mr. Krishna Kumar, who's the chairman of UCO Bank, right? So these are things which are great validations for public market investors. Public market investors are also extremely sharp. It's a misnomer or misconception that they are anyway less than private market. I would say that a public market investor is probably much faster at making decisions. So it's a double-edged sword. You need to keep your story simple. You need to try and make it relatable, because they have way too many options on the street to invest, right? And in terms of risks, they do understand what risks are there, but they do also see the growth. Look, if your company is growing and is profitable, right, that combination is a very potent combination, because that's rare. And if that's happening and you are compliant, that's a hygiene. One of the things which in the public markets also is much more acute is that you are going to maintain the hygiene. As long as that's there, public markets are a great place to be in.
Got it. So far the questions have been more on the market side. Slightly shifting towards the company, how has going public influenced your company internally? For example, your company culture, or not also?
So I'll give you an example, right? Small things. We have a company WhatsApp group. We're about 400 people. And every win, which used to be significant, folks used to announce that on the WhatsApp group, that, hey, we signed this contract. And as soon as we got listed, my company secretary came back and said, we got to stop this practice. And I said, why? This is great. This helps the morale. She said, no, almost all our employees are also shareholders, right? Because we gave ESOPs. And we are potentially prejudicing other investors because this is proprietary information that's being shared with only a few investors. I was like, are you serious? She said, absolutely. I was like, wow. And we stopped publishing that. So if there was any announcement that we had to make about a sign up, which was going to go onto the SEBI's website, we would first announce it to the boroughs, and then, there'd be celebration in the company. So, it is a bit of a dampener, but it is what it is. These are things that you need to adhere to, and as long as you're doing it with zero tolerance and you're very strict about it, employees also get it, because it's almost like, if you are able to enforce the rules from day zero and be very clear about why it's required, there is a maturity in the workforce that they need to comply. So I think overall it's been a great thing for us, but there are some of these minor irritants that you need to live with.
So one thing I noticed after going public is everybody becomes very revenue centric in the company. So whenever we push out requirements, I realize that all teams start saying that, oh, this can generate revenue, so we should prioritize it more. Earlier, it used to take some effort to align everybody, but that became really easy. So it gives us a score, everybody knows the share price, and everybody wants to do well. So I saw a very positive impact in terms of alignment in the company around revenue. Other was very unexpected for me. A lot of people came to me and said, oh, our parents were very proud of us after going public, because all their lives they've been telling, oh, we work for a small startup in Bangalore, and a lot of their parents just see TV regularly and watch stock market. And for them to see their children's company going public was a very big event. I didn't expect it, but like maybe 50 people told me this in the company.
It is unexpected to see how it influences families as well. Yeah. But talking about families, the last two questions are more from a personal perspective for you both. Is there any company that you look up to? Stood the test? that you would like to share with the audience?
So people usually say if you look at going public, there are two big advantages. One, people said discipline of quarterly calls, results, really put a cadence on the company to deliver really good result. And the second is currency for inorganic acquisitions. And we have all just heard it in books. We have not seen it firsthand. I think Blinkit's transaction on Zomato really made it real for me that you can buy an asset, it is widely resisted by all shareholders, stock price fall, and now Blinkit is valued more than Zomato's core business. So that I think made it very real for me that a great company has to fire on both cylinders, organic and inorganic, to do really well.
Yeah, I think Zomato is a terrific story, absolutely. I think from another company from an Indian context was way back, a Bangalore company, Infosys, right? Set the standard in terms of going public. The public listing, if you see, wasn't a great success. The listing wasn't a big success. I think it was 92 or something like that. But the founders persevered, and eventually it has been a great story, great Indian story. And that's a big lesson. The day one is not necessary that your stock is doubling or going out of the charts. When we listed, in fact, we listed at 164. The stock on the first day sort of tapered around that number, went down a little bit. But today it is what it is. It's in less than a year. It's about 360, 370. It hit 394 4 days ago. So, if you're doing well, the markets will recognize it, and companies like Infosys help you believe that. And of course, the other group, which I think a lot of people will resonate, where we have a lot of our customers as well as the Tata Group, right? And look up to them.
I'll maybe add a quick line. The other example I would have quoted is Infi. A lot of people don't realize that Infosys went public at 38 crore market cap in 97, which is inflation adjusted maybe 200 today. And it went from 38 crore to 70 billion over the next 30 years. So Indian markets, and a lot of investors in India market have seen these small companies and their IPO failed. So Morgan Stanley and Inam bailed it. And so India market has seen such stories where very small companies came and became really big. And this was a story somebody told me when we were doing a roadshow, and somebody told me after the meeting that, oh, did you guys know this happened? And this really personally motivated me a lot.
That is amazing. And the last question is, if you are to go back in time to the day when you started up, what advice would you give yourself?
So I think persistence is really underrated. Apple started in 1971. After 31 years, they launched iPhone. And nothing else they did before that mattered. So it can take a lifetime to create a large company, and you just have to be at it. So don't think in terms of 10 years. Like it is like Narayan Murthy spent 25 years to build that Infosys. Jeff Bezos ran Amazon for 25 years. So usually one person has to sacrifice their entire lifetime to create something meaningful. So you have to be at it. Don't get tired because you've been running it for 20 years.
For me, on a lighter note, because I'd almost never worked in an Indian company before I jumped into Zaggle, right? So on a lighter note, the advice that I would give myself is prepare family much better for what's to come, because the thought was, very US-centric, having studied in the US, that 4 years you'll know whether it's going to work or not. No, even a decade is just the beginning. So, and family plays a very critical role in helping you go through the ups and downs, especially your spouse or significant other. So I think one advice that I'd give myself is definitely prepare your spouse a lot better for what's to come.
Got it. I think we'll open up the floor for questions. Questions? I think we have time for 2 questions. Anyone?
Hello. Hi, Avinash and team. So any reason for you chose Indian market over because you both are running a SaaS company, and for in India it's very new, and I started seeing SaaS companies getting listed in last only couple of years, right? Like, what is the reason for taking this decision?
So I think as a rule of thumb, I would say that you should list in a market where uh, you have significant business, right? Where most of your business is coming from, because that's the market that your investors would understand. Unless the market is, a very small market, something that's totally not understand. And so I'm talking largely from the US versus India trade-off. Um, that was the one big factor. The second, of course, is the regulatory or compliance cost in the US versus getting listed in India. The compliance overhead or overhang in the States is very significant. Thirdly, look, when Raj and I, when we spoke of it, started off, um, we are both Indians, we are both proud Bharatiya Indians, and it's felt right to be listed in India, at least first. It doesn't stop you to, get listed in the future in other boroughs, but think of IPO as like a wedding, right? Where would you like to get married? Most of us possibly would want to get married close to family, friends, where you are from, right? So that's how I would describe it.
So in today's context, there's no commercial, there is almost no reason to list in US today. Indian valuations are higher, compliance cost is lower. You are more understood as a founder or promoter in local context. I can't see, I practically advise everybody to just come and list in India. There's practically enforceable feature, there's no reason to go outside.
To that is, I think Tracxn, I'm over here, yeah, hi. So I think Tracxn, most of your business is from the US, right? It's outside India. So in corollary to what he said, how would you think about that?
So Infosys, most of the business come from outside. So Indian markets have seen global revenue. So far, global revenues were more premium than local revenue. Again, consumer businesses are more valued in India because GDP is expected to grow at a much faster pace. But global revenues are always well respected because TCS made insane amount of money for their shareholders.
Basically, this question doesn't matter to me in the next 10 years. I'm just so, but just to understand what changes in terms of the decision making when you go from a private company to an IPO company, you have to day-to-day running. What you mentioned is everybody focuses on revenue. But once you start focusing on revenue, you start less focusing on acquisitions like Blinkit because it doesn't, it affects your entire profit of the company. So in terms of day-to-day operations, and what are the major changes that happens when you move from a private to a publicly listed company? And is it always recommended to go public because it makes you more disciplined? Or what are the disadvantages? Because we discussed everything which were mostly positive, other than the WhatsApp thing.
See, again, I'll go to that example, right? And it's relatable. Going IPO is akin, in my mind, to getting married, right? Now, is it advisable to get married? Should everybody get married? When should you get married? How should you conduct yourself before you get married? It is what it is, right? And each one takes their own decisions. But you will see a certain homogeneous or baseline behavior traits of people who've been married for a reasonable length of time, right? There is a certain discipline, a certain way of living, you will see that pattern, right? And you will see that pattern in good listed companies. So that's where you're going to go. Now, you may choose not to go that path. That's absolutely your choice. But I think it's fairly understood what it means in terms of behavior and approach. You need to be responsible. You're dealing with public's money on a serious note, right? When you're taking private money, you need to be responsible, but you need to be 10 times or 100 times more responsible because you're possibly taking money from, in today's day and age with everybody investing, you're probably taking money from your driver, your maid, right? Literally everybody is investing in the markets. So how are you going to do justice to their money? How are you going to make sure that they are getting returns, right? That should be the mindset. To the last smallest investor, are you doing justice? Are you doing your best possible, right? So I always mention that, our core values were always that we were frugal, nimble, and humble. And that held us in good stead because that has been our DNA. And, public markets really are, very, very comfortable and happy with that. So to some it's acquired taste, to some it's inherent DNA. But this is where largely you would be if you're being a listed company in that range.
Also, I completely resonate that this is the best framework we have to create and build large companies. If you look at world's largest company, a big portion of them is public now. Beyond that, I'll give you one very basic example. Like before being public, we were 30 shareholders. The day of IPO, we were 30,000 shareholders. Now today, we have 1 lakh shareholders. I run into people in my apartment during walking who are my shareholders now. So you need to have a lot more grown-up behavior. That is expected, and that is also the biggest benefit. You start becoming more mature, more responsible person. And that's why it's a great framework to build large companies, because that quarterly cadence. We all do well if there are exams. If there are no exams, which kid will study? So we are all born out of that exam system, and this quarterly cadence is really a great forcing function. You can of course take it negatively. You can screw your health, you can screw your happiness if you do it negatively. But it's a great framework. And over time you grow into it, and that really builds that discipline, that what it takes to deliver consistently for years. Imagine if you think about Steve Jobs, 31st year of company origination launching an iPhone, which means that much cadence is required for you to do your best work of your life when you have been running this company for 31 years. That can happen when you have a great framework around you. That the quarterly cadence is really helpful in my opinion.
I think the operating word is the discipline.
I think we are at the end of the session now. Thank you so much, Abhishek and Avinash, for coming on board to speak. Abhishek and Avinash will be here for a bit, so you can always network with them to know more about their experience. But thanks again for coming on board and being a great audience.